All right, let's get the microphone check out of the way here. Let me know if you can hear me across the various chats. We've got quite a few going today. We have 3 public streams and, well, looks like 2 private streams for those that cannot access some of these websites publicly from your network. Yeah, from your work network. You should maybe get in touch with IT and have them whitelist. Well, okay, I could see why they wouldn't. Yeah, this works. This is fine. Okay, cool. Let me look in. All right, so Twitch is up and running. Hey guys in Twitch, how you doing? If you are in Twitch, I do suggest that you either head over to the YouTube live stream chat or the x.com, formerly known as Twitter chat, because we are streaming on Twitter, X, and YouTube. YouTube is where most of the public chat is happening right now. You can find me at Landy's Crypto Corner. It's linked right up top for you. Cool. All right. Yeah, because when I click away, I can't, for whatever reason, this plugin is not showing me Twitch chat, and it's actually a Twitch plugin because it works great over there. Yeah, I don't know. We're going to get started here in just a second. Let me know if you can hear me over on YouTube. Spin says audio is chill with beats. As long as you can hear my voice, that's what matters. By all means, yes, go ahead and hit the likes, whether you're on X or YouTube. I mean, even Twitch, that helps too, yeah. Get some more people in here. We're going to talk all things Bitcoin today. We will also take a look at Dixie, gold, and traditional markets. I'm going to repeat all this in just a moment, but I'm waiting to see if you guys can hear me in the YouTube chat. All right, let's get the music under control. It looks like you guys can hear me over there in YouTube. Thank you, No Name. And Bobby. Let me go ahead and get the music under control, and we're going to roll right into this today. All right, let me pause that on my end, and let's get rolling. Oh, well, that didn't help. That's just the start screen over again. Let's do this. There we go, and we're live. Hello, and welcome to Landy's Crypto Corner. Today is January 12th, 2024. I had to look down there. I'm losing track of the days since the ETF launch. Been very busy. We're going to be looking at Bitcoin today. For those of you that might be watching this currently coming in to this is a live stream. Yes, it is a live stream. Is this recorded? No, this is a live stream. I can't tell if you're being silly or not, but yeah, this is a live stream. We are going to be looking at Bitcoin, of course, and the price correction that we're getting in today's candle. We'll also evaluate what happened yesterday in the first real live trading day for Bitcoin ETFs. We're going to take a look at Dixie, gold, and traditional markets as well today. We are, of course, going to start out, as always, with Bitcoin here. You can see the Bitcoin. If you if you watched yesterday's video that I uploaded, the pre-recorded video staring at charts, I talked about this exact move. If this monthly here and upper first was dropped, then I'd be looking somewhere around the basis to weekly here. So that monthly and upper first standard deviation of the Bollinger Bands is around 45.5. Then the first target zone of interest is the basis band, which was a little bit higher than this. It was roughly 44.1. We can just call it $44,000. It is adjusting in real time. It is just slightly below there. The first big area of interest would be this basis band to the weekly just below at 43,200. And you can see we have hit that on a wick. Wick low coming in at 43,134. The next big area of interest below here, of course, is going to be the lower first standard deviation of the Bollinger Bands here at around 42,500 to the weekly here at 41.8. If we do see that area lost, then I would be targeting a run of this higher low structure on a close. And the wicks, of course, if it does get below the lower first, then it is above this higher low close. Of course, this was a high to another higher low that then came up and tagged our overhead targets here at the 2 monthlies at 45.5, which was tagged, to be fair, on January 2nd. But then we had our $47,000 target. And then, of course, a swing of the monthly highs up here. Now, it didn't quite get to the $50,000 level. And it does look like that is out of the cards at this point now. But, you know, if we did see a close above that monthly swing high at 48,240, 48.5 or so, then I was looking for a run to around the mid to low $50,000 region. And we had mentioned that this area was likely to get swung. We talked quite a bit about this actually in the lead up to this ETF event. Now, if Bitcoin does drop this 41.8, I would be looking for a sweep of the lows by the lower second at around $41,000, maybe 40,800, depending on your exchange. But that is going to be roughly just below this close open at 41.2. It is not out of the question to be looking for $40,000 either, because we do have this wick low here from January 3rd. After that first move up to the monthly overhead at 45.5, we had a swing all the way down to 40,625. Of course, it did come in on a higher low swing basis than this guy over here at 40,500. And then there's another wick down here at 40,150. On many exchanges, it is $40,000. So keep that in mind. If that area is lost, of course, we're looking down to this weekly and monthly zone of interest at 39 to the 38,500 monthly. That weekly is $39,000 or so. Now, this is a big one. I mention this pretty much every time I talk about it, but this was a big zone of resistance. So we saw consolidation in these two weeklies between 37.7 and 36.2. And while Bitcoin was consolidating in this area and using the monthly just below, monthly and weekly in this case, after this $35,000 monthly was breached, you saw the rejections over here. We had a move up to these two weeklies, right? 36.2 to around 37.7. I believe, you know, it did start to hit around 38K. Kind of getting front ran on the short side ahead of this monthly at 38.5. Then we saw 3 good wicks into this monthly at 38.5, a nice move above it, and then close above it with a wick into the overhead weekly resistance at $39,000. That resistance was short-lived before Bitcoin blasted off to this big weekly zone up here. Now, this big weekly zone is not as clean as some of these other levels, and that is because volatility is really picking up with price as more leverage comes into the markets. So, you know, swings above and below this weekly zone are to be expected. And, you know, it doesn't have to be perfect in this area, but I would expect if this weekly here at 41.8 is dropped, this prior range, which we have now deviated from to go hit those highs at $49,000 and are heading back to around the mean of this range. Well, if it is dropped, then we do have, you know, very good levels of support down below. Specifically, I would be taking them in order at this weekly at 39 to this monthly at 38.5. Now, keep in mind that I would be looking for daily closes below the wick low here. If we just see a wick into this zone down here, now, again, Bitcoin's all the way up here at 43,200 or so. But as I'm going to show you, the possibilities to push price down are are looming large, and especially if we see it start dropping, higher low closes, and then subsequently the next higher low, and then the wicks. That would be an indication, of course, below the lower second standard deviation of expansion to the downside. Now, I will warn bears. We saw expansion kick off to the upside here. Now, expansion kicking off to the upside, tagging that upper second and third standard deviation, and then a move back down to the basis to lower first is actually bullish. It's when things start closing below the lower first and subsequently following that up with closures and further expansion below the lower second that we start looking for a larger bearish trend to emerge. In this case, this is mean reversion back to the base of this consolidation as it stands right now. This could run all the way to the lower second. It would very likely bounce around these lows, and then we would come back to it later. So unless we see a giant red candle follow this up and just keep nuking down through all of these levels, I would not be looking at this as the 1 to 12K, as I keep seeing these kind of weird, really weird, crazy takes where these long-term bears have had this moving target to the upside of like, well, if 28K gets breached, then my thesis isn't valid. If 30K gets breached, then my thesis, and then it just keeps getting walked up the entire way up. And it's like, okay, this is just silly at this point. Now we're going to look a little bit deeper at some of what's going on the lower term timeframes. In fact, I want to show you how clean this is on the lower term timeframes. Now, you may remember from yesterday's video, if you did watch it, I had mentioned the monthly, and then the monthlies dropped, and they and specifically these wick lows over here had a little zone drawn out around this consolidation prior to the move up to new highs, and I believe the wick lows lined up with this guy here. Let me get a horizontal in here real quick just so I could show you. Yeah. So this 44,700, 44,400 wick low area right here. Well, you can see how clean this was. Once the monthly was lost on the 15-minute chart, that was on expansion to the downside. It was even retested and failed. And you could see that this big volume spike came in right here at that 44,700. Now, this was on I believe that was the account hack for the SEC, claiming that ETFs were approved already. And we saw a big volume spike. Let's go ahead and throw a volume on here, actually. And that was this big volume spike down here. And it was right around this consolidation. And we were actually looking for this at the time based on our prior analysis during a live stream, in fact. Now, you could see that after the monthly was lost, came down, it tried to bounce at this level, that high volume level. And I had said in yesterday's video, if this area, this line is lost, we're probably looking to walk things down to the weekly here at 43.2. And look at how clean that is. On expansion to the downside, lose that high volume candle, lose then the other not so high volume candle wick lows here, where it did try to bounce, to be fair, on a few 15-minute candles here around 44,000, 44.2 area, and then immediately down into this weekly at 43,200, with that wick low, of course, coming in at 43,200. Wick lows coming in at 43,134. So beautiful, beautiful, beautiful stuff. Again, I say this all the time. One of my favorite setups is emerging. This would be a very, very, very short-term time frame scalp setup, and it would need to be verified by, the time frames higher would need to agree with this. But one of my favorite setups is beginning to emerge on the 15-minute. That's where you get expansion to the downside. You get a retest bearish, and then you come back down. You either swing this low or you head back down and you hit the lower second standard deviation again. And that's usually the one that does it. Sometimes, you just see it head down on expansion, come back up, fail, and then try up higher before getting that continuation down. I'm not quite sure what this will end up being right now, as we are seeing a bit of a double bottom here on the 15-minute. But again, this is a 15-minute chart. These are only really, this would only really be good for a scalp opportunity. We're going to get down here and take a look at the Stoke, just because I do think it's worth looking at the lower term timeframes, as we have had some big volatility come in these lower term timeframes. But we can see that the Stoke is pointed up in the oversold zone with the pivot at 43,316. Price is trading slightly above there at 43,440 or so, kind of oscillating around that area and the lower first standard deviation. But more importantly, what I'm looking at here is the volume. And the volume, where did it peak? Well, it peaked right at the weekly, which is what you want to see. You want to see this volume peaking right at levels of support. So, the liquidity started to come in around that low side high volume area, this previous high volume zone over here at the $44,000 mid $44,000 level. And you saw volume increasing on the move down below the monthly, even had some people washed out, probably on higher leverage. But this sell off into that and through that level, the retest, and then volume built all the way up to its peak down here at the weekly. You love to see it. This is a beautiful, beautiful thing, to be quite honest. If you really love trading, then this is something that you are probably obsessing over, like I do, I hope. I know some of you over there that are studying for your exams. There's a guy. Is it okay if I say this live, Jimmy? So there's a guy who's going for his market maker exam, series 24, and he is an absolute volume master. And we were discussing some of the volume techniques that I, for deconstructing the order book that I have taught you in the past. And he gave me some good pointers on that I'm going to review with you guys soon. As it stands right now, though, we have this level lost. We talked about this level in the video yesterday, and heads down to the weekly. We don't have support and resistance on this chart, but I am bringing up our normal live stream chart so that we can go through some stuff here. We have the landing bands on the band levels. Let's go ahead and shift even this over to a 4-hour. So we'll keep the 4-hour on for now while we're on some of these lower term time frames. What you notice here is the 15-minute is below the lower second and third of the 4-hour Bollinger Bands. The 15-minute is also in a contraction phase for price action. Now, this is also known as mean reversion, but where did it mean revert to? It mean reverted off the lower second to the lower first. So that was the portion of mean reversion that we've seen so far. Now, you will continue to see this cool down even if Bitcoin spikes down to the lower second standard deviation, but we're at extremes when looking at the 4-hour Bollinger Bands. So we are diving, this is a little bit of a different stream. We're diving deeper into the weeds than we normally do with some of this stuff. So when looking at this, this is a nice compression on the 4-hour to expansion. So we would expect continuation if we see closures below, the wick low over here at 43,200 at the weekly. And then we start looking at the close opens down here. I don't think there's any high side structures. There is, actually. There is. But we'd be looking at the close opens over here, which coincides with this high over here. That's your 42.5 to 600 area. So there's a low here. There's a swing high here. You can even see where price is currently trading. There's a high here at around this 43,200 level. There is also, some area, this was held as support over here on these 4-hour candles. You see that there's a bit of a high structure here as well. So there are swing highs and closing highs in this area. Nice big volume on this particular move down. So what I'd be looking for in the next 4-hour close, which by the way, we don't need this this zone anymore. We can get rid of this. This is not doing us any favors, and it's cluttering the chart a little bit. If this fails to break down further, especially on a close from this wick low at 43,200 or so, and of course that's its current wick low is lower, I would be looking for it to at minimum try a lower term time frame bounce to the lower second standard deviation. So the levels are set to the 4-hour, so they are going to match the Bollinger Band, the live Bollinger Bands over here. And in this case, the lower second standard deviation is at around, I can't read that from over here. Is that 44,300, 44,400? That's what it looks like, yes. All right, cool. Maybe even a retest of this close open if it can regain the lower second and spike up towards the lower first, which, is around the wick lows here, coming in at 45 to 45.2. Might even see a retest of that 45.5 to 6 area at this low up here. So we did have a little bit of a structure change. We have a structure change here on the 4-hour because we do have a closing high. We have a higher low, and then we have a bit of a higher high on a close open basis and a swing higher high to a, so we have an uptrend, right, to a lower low. So what you would be looking for is a bounce up into possibly a lower high. Typically, if you see the lower second, lower first regained, then we're targeting the basis. Right now, the basis is at $46,000. I do suspect that, we're looking at how long till close. So we got about an hour till close. I doubt, it doesn't look like Bitcoin's going to race to $46,000 within the next hour. So I would be looking for this basis to start heading towards this low over here on a close at around 45.5 to 6. So that's where, we start looking at the lower second and lower first. If they are regained on the 4-hour time frame, then I would start targeting around the basis for a bearish retest, especially if it is at this closing low. If it does head up above the basis and or regain this low, I would be looking somewhere around the upper first for another retest, $46,900 to $47,000. And then this would be a deviation. But if it did fail that area again, we'd probably be looking for trying to resume to the downside and at least test wherever this current low comes in. Now, this is only just kind of getting rolling, and it's still all within a range. So keep that in mind. It is really difficult when things start dumping off for a lot of even not professional traders, because professional traders are looking for this stuff to happen, to go to areas of liquidity for entries and exits. But a lot of people in the crypto markets do not really, when they see the red candles start coming, it's a race to some of the lowest lows that they have picked out on their charts. And in many cases, as we have seen throughout this run up in Bitcoin, that has been a fool's errand. That doesn't mean that things can't change from here and won't change from here, but I do want to point out where the lower second and third standard deviations are in relation on the 4-hour. So this is the band representation of the 4-hour on the right here with the levels. And then we have the daily Bollinger Bands here. So you can see that if Bitcoin does drop the basis here, even if things start to bounce in the 4-hour, I would be looking for expansion of the 4-hour down, obviously, as the bands continue to widen close over close. But I would be starting to target this lower first. This lower first is right there at that 42.5 level. So that is an area of interest that we just talked about. Now, as long as Bitcoin can hang out in that area, and bounce from it, then I would be looking for a regain of the basis and then a test of the upper first, and then possibly a swing up to the highs at the upper second. On the daily, of course, that would be the upper first, or where the current upper first is on the 4-hour. So, and if it is dropped, that's where we're looking for the lows of the range. And, I'd be looking for shorter term time frame bounces and then come back to it later, see if it actually ends up breaking down. As it stands right now, this is a healthy correction, a much needed correction. Let's go ahead and put the daily Bollinger Bands on the levels indicator over here. And we're going to move up some time frames. We'll get rid of volume here, clean up the chart a little bit more. Oh, we should actually look at the momentum pivot. So we do have a confirmed cross down. And the momentum pivot is at $46,000. So, if Bitcoin does happen to regain that in the next day or so, I would be looking for things to head back to the highs here. Still have green DMI, so that means we have the advanced Stoke on. This is not a free indicator, but you can get a Stoke with pivots. This is the BA reverse Stoke panel. You can search for it in the indicators tab up here. If you are interested in the advanced Stoke, which has DMI and ADX and all that fun stuff, that's a paid indicator from KVDB, and it's offered over at app.crowntrading.net. I have no affiliation with them. I just really enjoy the indicators that they put out. I think that they do a great job, and I support them myself, but I don't have any affiliation with them outside of being a fan of the developers that Crown has over there. Now, in this case, this would be, I think, a little bit of a tough reclaim as it stands today. I would wait for the, weirder things have happened, and the day is still young in some respects here with 5 hours to go. But we'll see what happens after market close today. In this case, I'm talking about traditional market close. So, post-market price action, stuff like that. It'd be a little tough for Bitcoin to regain that particular pivot, I think, within the next 5 hours. But if it did, it would cross things back to the upside, at least initially. And I'd be very wary. As I said, initially, you'd want to see a full confirmation on the cross to the upside. In this case, we see that, we've got a bit of a range forming here with the possibility of more bullish divergence building on the next low. As long as Bitcoin, Bitcoin could realistically drop right down for a retest at 38.5, that monthly level here, where Bitcoin was rejecting initially before the push up and consolidation and reaccumulation and tag of the bear market highs. I would say, yeah, man, this could get hidden bull divs all the way down to $35,000. And specifically, we have this spike into the monthly, weekly area down here at $34,750 to $35,000. So that would be this zone. Let's get rid of volume on this chart as well. Just to remind you, I see people jumping in and out. So if you want to know where that zone was, the 35,000 to 34,750 spike is this candle. So we had the rejections at the weekly monthly area, deviation above, and then a move to those weeklies, and then a spike directly down into the monthly at $35,000, and the wick low or swing low there coming in at 34,750. So Bitcoin would actually be able to throw, hidden bull divs all the way down to that low from here. So no matter where it sets its low, as long as it's above there, it's going to get a hidden bullish divergence. And I'll be quite honest, the RSI looks pretty juicy here. If we look at the bearish control zone, we can see that is $39,000. I'm sorry, $39,661. Bear critical zone would be 24K, and that's all the way down here at a 20 read. But I'm not really looking for that. Seeing as there is so much support below, that would be a crazy move down, and I highly doubt that that's going to happen from here. If anything, it would happen over time, and we would need to see the trend develop here. So now that we have traditional market players in the game, a lot of people are looking for these big liquidation events and stuff like that. That is still possible. It's not the first thing I'm looking for. Big liquidation events in derivatives markets for the Mickey Mouse exchanges may still occur, but I think it's going to be very structured in its moves down. What you got to understand about ETFs, we're going to talk about ETFs for a minute. So let's go ahead to the 15-minute chart, kind of observe price action. Maybe we'll just do this chart because we are not going to be using it. We're going to go to some higher term time frame stuff in a moment. But when ETFs are being filled or launched, the creation units need to be filled. And when an ETF is launched and the ticker is listed and shares are tradable, there's the initial lots of the creation units from the seed rounds that are there. But they have to create the creation units. All right. So the creation units are usually done in lot sizes. Those lot sizes are funded and sold immediately, and the proceeds from those sales, and then the participant that funds the lot creation will take the other side of the trade, while people buy those shares. The money that is then used, or the shares that are bought, it's hard to explain. The shares that are then bought are going to be that money from those proceeds after the AP or the market maker takes the other side of the trade. The proceeds from the sale of the actual shares are then transferred over and used to then go and buy the underlying asset to back those shares that were just issued and sold. So you do have lag time. Fubar put out a pretty good explanation of that. It's not, he used the term fake shares. It's not fake shares. It's funded. It's some of those some of those shares are going to be already backed, but they're delivered usually to the seed round investors right off the bat. And then what's coming in is what he's explaining is the creation process for those that read that post. And the creation process is really just, somebody's got to put up the money to get the creation units made. While that's happening, you have a lot of things happening at the same time. So the creation unit lot sizes are filled in cash. Those shares are then issued so that they can be purchased. While that's happening, the money that was used to fund by the AP is then they take the other side of the trade there so they can basically get their liquidity out, right? As those shares are sold, the proceeds from those are already being used. It's not just the proceeds. It's not like they have to wait for that entire creation unit lot for retail to come in and purchase them, and then they go and start purchasing the underlying asset. These things all happen at the same time. So, and I think it's a little unclear. He kind of called it fake shares. It's not really fake shares because once they take the other side of the trade, the liquidity from the other side of the trade is what's being used to purchase the underlying asset to fill, to back all of that creation unit lot. This only typically happens when you have a launch of an ETF. And the reason why it's maybe a little bit different with Bitcoin is because of the amount of volume that came in. It's absurd. For those that don't know, the amount of volume that came in on these ETFs is unlike any other ETF launch. I mean, there has been other. It's kind of the same with stocks too. There have been other like launches on NASDAQ that have had big volume, but nothing like what we've seen with the 11 spot ETFs coming in. That So that process, they still have to go to, as creation units are being made to fulfill shares, liquidity is put up ahead of time by market makers and liquidity providers. Market makers are facilitating, the liquidity in there, and liquidity providers are kind of, they can be all one and the same. You can say it's the AP at this point. There's a lot of different things that feed into that, but I'm trying to explain it without getting like way too deep into the weeds. Yeah. um, but basically what ends up happening is the AP, along with the issuer, have to work together, to basically seed in their own capital to get the creation units made, and offer it up. They take the other side of the trade to get that liquidity to then go and work with, the different brokers that they have and OTC desks to, in this case, get that Bitcoin into custody. Now, there's also, Coinbase has basically locked up some of their own Bitcoin on the side, with in anticipation of this, so that you could just kind of go over and say like, okay, here you go. Here's the, basically you're claiming the custody of this for your particular ETF shares, and this lag period will then catch up to where it's literally just creation units are Bitcoin backed immediately. And then, you'll start seeing creation and redemption process. So that's where you'll have cash creates, cash redeems. And as that happens, that Bitcoin pool, of backing stays, the same. And what I will tell you is, the ETF launch was super, super smooth on Thursday. And that is not an easy thing to do. There's so many moving parts. And because, it's, a relatively new, asset to many of these players in the game, it took a lot of coordination, between all of these different, a lot of them are using the same custody, provider in Coinbase. So it's a little bit easier in that regard. But, a lot of OTC desks have been holding Bitcoin, and a lot of miners, OTC desks have Bitcoin available because everybody knew that this was coming at some point. So it's not like a scramble, but those deals still need to be done because you have to meet the specific set of demand for the volume that's coming in. And when more volume keeps coming in, you got to keep putting up more for those creation units, and then get that, take the other side of that trade, get the money back in so that you can go to the OTC desk and back all those shares. And either way, the money's going to come back in. So it's fully backed either by the cash, and it's just a lag period. And that's going to happen with every creation unit when you do that anyway. And then eventually they'll get ahead on creation units. And then, there's ARB opportunities also that were going on and are still going on right now. There has to be money made in all of this as well. You can't lose money on this particular process. And luckily, everything went very, very smoothly. And there's nothing, nefarious about any of this activity, just so you guys know. That is something that has been, kind of implied in a lot of comments to his post and a lot of comments to other posts, Newhouse and Seifert. It's just, and it just really speaks to kind of the lack of understanding within the crypto ecosystem and people that trade crypto. It's just this lack of understanding of how traditional markets work, and how liquidity works to back spot, ETFs. Yes, they really are holding Bitcoin, all of these ETFs, even though they're cash creates, cash redeems, the actual shares are backed by real Bitcoin. You're not buying just paper shares. During the initial creation unit process, it is running, it's basically a lag, but it is not fake shares. It's not funny money. I mean, US dollar, debatable, but the liquidity is basically there, and your claim to the backing on it is real. So, Wanted to clear some of that up. Let's move into some of the higher term time frame stuff. So we are starting to see on the 15 minute. I will point this out. So we are starting to see that the 15 minute is popped up and is finding resistance at the lower first. It did deviate above. Now it is trading back below. So if it does lose this wick low at 43,134, then we're looking to the lower first. This is the lower first on the daily, by the way, which is now the lower second. So remember these levels, we switched to the Bollinger Band to represent the Bollinger Bands on the daily. And we have the lower first on the daily lining directly up with this, or directly in line with this lower second as it currently stands on the 15-minute chart. So this is, again, one of my favorite setups is the expansion to the downside, mean reversion, and then a spike down to that lower second standard deviation again, especially when it comes into zones of interest like the 43.2 to 41.8 weeklies. And then it's also lining up with Bollinger Band, major Bollinger Band levels, and areas of support and resistance. Let's go ahead and do a few things here on the daily. And then we'll move up a few time frames as well, just to kind of illustrate where things are in the grander scheme of things. We're going to take the up candle that kind of defined this open over here from December 4th. That was the big pump candle after the resistance here. The candle before it is the candle that was the close open above the 38.5 monthly and then spiked into the weekly at $39,000. So what we're going to do is we're going to pull a volume area of interest over here. We're going to use, we can use anchored volume. That's fine. From this open at roughly $40,000. Because if that area is dropped, well, it's going to be a retest of those major levels down below. All right, so you can see that if we go ahead and turn off the bands real quick, we can see that the highest level of volume, or the pivot here, or the point of control, if you want to call it that, is at 43,650. That is the highest volume traded price for this particular range right here. We have the value area high and value area low. So the value area high is coming in at 44,500. Saw the spike into that area back here on the 10th. And then we have the value area low coming in right around $40,900 to $41,000. So you can see that there is some higher volume in here, right around this higher low area, which coincides with some order blocks in here as well. And that starts at around 42,500. So let's go ahead and turn the bands back on and just see where we have confluences. So right here at the basis, we have basically the end of the highest volume area for price traded at around that 43,650. Of course, just below there, I'm sorry, that's $44,000 basically. 43,950 to $44,000 where the basis is, and then the point of control slightly below there at 43,650. The lower first is coming in right here, right around that 42,500 to 600 area. So that is an area of volume interest or significance there. And just to show you kind of how I like to backtrack some of the volume stuff, I'm going to give you this little tip. Go ahead and mark that area. It is a big area. It's also around the daily lower first, so that makes sense, right? We just talked about where the 15-minute was there. But let's go to the 15-minute. We got that level there. Let's go ahead and turn on our regular volume bars. And we can look at where this area was tagged, and we can see where some high volume was. And this was back on January 3rd, we saw this big move down that did spike into that 40,600. And this particular high volume area was retested right here, and that was on the 4th. And you could see how this kind of area became a big area of significance because we swung down below that higher volume area, consolidated around it, pushed up above it, got a close open below it, and came and marked price up to around the $44,800 to $45,000, and had a spike directly into it. Let's see, and since then it has not been tested. So let's look before that. You can see that there was all kinds of consolidation happening around this area as well. Had a low put in just below it and retest, and then up to the 44,500 area. So you can see how this area is significant for volume, kind of like the point of control is just above. All right. Just a little tip. All you're looking for is confluence, and the biggest confluence with that area in terms of volume being the next biggest area of volume below price action in this case is that lower first standard deviation of the Bollinger Bands. So that is really what I would be paying attention to, as the volatility levels, when they line up with support and resistance, they are they're OP, as they say, as the kids say. Yeah. So I had a question come in about. Yeah, no, we haven't looked at it yet. The weekly. Yeah, no, the weekly. Bitcoin is still above the upper first. Yeah, this is a rejective weekly candle. If Bitcoin does lose the upper first at 41,650 or so, it's got to hold basically that open at $40,000 over here on this weekly candle, and remain an inside bar. If you look here, you can also do this, and I'm glad that you asked this. So we can do fixed range volume, and you're going to come up with the same thing. So it's going to be a little bit different than the anchored volume. But if you look here for the fixed range volume utility, we've got extend right is on, so that works. We can go back to the daily, and you can see that the inside bars, because these are all inside bars on a close right now in the weekly. So just to show you what I mean, the close up here at 43,793. This close open here, we got a slightly higher close at 43,950, but then everything has kind of been still, what I would consider an inside bar inside of this larger weekly candle. But you can see that the value area low is lining up with the daily lower second standard deviation. So, if that area is lost, it's, the last stand for the bulls here is right around that $40,000. Otherwise, it's, going down for a retest of some lower levels. But, the point of control should be about the same. In this case, it's at 43,900. So it's actually, yeah, 43,900. No, that's the basis. I'm sorry. It's not giving us that POC. It's, no, it's the same as the anchored, around 43,650. So yeah, it's not, it's not a given that it has to come down and test the lower second. I would still be keeping a very close eye on the lower first at 43,500. If we do see, see it dive below the 43,200 weekly. So to answer your question, what I would be looking for is if the 43,200 weekly is lost on a close, we start looking lower into this zone between 43.2 and 41.8, and then below there, then start looking to some of those lower levels. I hope that answers your question, I should say. Yeah, no, I'm super highly caffeinated. My apologies. A little stuttery today because of the caffeine. Also a little shaky. Been putting in a lot of work, but yeah, on weekly closes, as long as Bitcoin's closing above this upper first and can remain an inside bar from that $40,000 open over here, then the upper second is going to be the most likely place for things to head on its way up. The local support and resistance areas, obviously, like the open of the weekly at $43,950, almost $44,000. So you do have a weekly open there, right? So above there, then you're looking to the highs at 46, and then subsequently the upper second around 48.5 to the highs there at $49,000. And remember, we talked about this. As long as, from last week into this week, as long as Bitcoin is above the upper first, it was likely to, and it was likely to head up to the upper second and swing above it, maybe even significantly if it could close above it. But so far, we've only seen a swing above it. Yeah. No, today's more of like me chatting about stuff. Yeah. It's not like the structured, I'm going to go through my rigmarole of, no, today's for interaction, talking with you guys. Yeah. So for those of you in public chat, there's a few different chats going on here. So I'm getting questions from people in the private chat that can't join the public chats because of network restrictions at work. And then I've got, I did manage to get into Twitch there. I still do suggest you head over to the YouTube channel and chat with the guys there. There's more people on YouTube. So Cheryl asks, how does the price of oil affect other markets? Yields, Dow, et cetera. Of course, NASDAQ. I mean, it's a commodity. Oil's tied to the US dollar. But it's really, right now, it's about availability, and there's a lot of politics going on with oil. But we can get an idea of what's going on by looking at Dixie, which I suspect is bouncing on the daily. I haven't checked up on it yet today, but let me go ahead and say hi to everybody over here. Spin, hello, no name, Roca, Bobby, Cheryl, Baba. How you guys doing? Sam Alk is here. How you doing, sir? And quite a few others hanging out in the stream, but not in the chat. Hello to all of you. Let's go ahead and, before we'll come back to Bitcoin in just a moment. Let's go ahead and take a look at Dixie. Excuse me. Everything kind of moved around a little bit. Let's look at currencies, bonds. It bounced, and it's still finding resistance in the same area that we talked about. But, we do have a bit of a range being set up here on the Bollinger Bands. So this bounce might be turning into a little bit more of a long-form consolidation. Now, if Dixie can close above the upper first, I would look for it to retest. We did actually... we got our strike over here, not quite up to the 103.5 level. It was on the lower end that we were looking at this wick to this close open. So we had this area already tagged, and then we got the 103.17, or basically 103.20 to 103.50 zone. And we've just seen the lower end of that. No, it wasn't tagged, actually. I'm sorry. It missed it. Just coming in at a high of 103.10. So if Dixie can regain the upper first here, I would expect it to retest that area into the 103.5 low up there. Now the upper first is coming in at 102.50. So, something to keep an eye on. Daily momentum is turned against it right now. And it is kind of setting up a range. Realistically, only once it can start closing back above the upper second now at, basically 103 and take out that wick high at 103.10, then we would look for expansion to test up further into the 103.5 to around 103.90, 104 area. Above there, looking to about 104.20 to the 104.50 to 60 zone. To the downside, if the basis is lost, kind of a zone at 102 even to this 101.77 wick low over here of this particular low, swing low in this case, then I would be looking for it to head down to 101.5 at the lower first. If it doesn't hold up there, then we're looking back to the lower second. And the lower second would be a zone of interest around 101.04 to 100.5 or so on the wick low. If it drops that, it's going to be, we're looking at 100 even and 99.50 are the supports. I mean, it really is just 50 cents at a time on Dixie. When looking at commodities like gold, gold got a picture perfect bounce off of the weekly level down here and the lower second standard deviation. The low, the actual swing low coming in around 2013, but that 2015-16 weekly zone is really what we need to see hold up. Nice bounce off of there. Big fat rejection off of this upper first standard deviation up here, which is coming in at $2,061. But if gold can close above the basis, and especially this wick high of the low is what I meant to say, at 2046.65. If we do see that closed above, we'll see a low set. This would be a higher low, not on a swing basis because we do have a swing down to a swing high, but on a higher low on a close. And then I would be looking for this upper first to get tested again at 2061 to the upper second and overhead resistance there at around $2,080. Above there, then we're looking for this 2,088 to $2,090 to get taken out, and then go on and fill that wick up to around 2,150 or so. If by chance we do see this area here at 2034 by the lower first dropped again, I would keep a very close eye on this lower second because we are getting a bit of a compression here. If we see that lower second area dropped at 2016 by this weekly and the wick low lost at around 2013 on a close, we would be looking for expansion down. Next big area would be over here, kind of a zone between $2,000 and 2007. Probably initially hit on a wick basis. The real area that I would be looking at is this close open here at around $2,000. It's 1998, but you could take 2K to the actual swing over here. The swing low area that was retested at around that 1980 to 1965. That would be kind of nasty, but let's look at momentum. It's more biased to the upside, especially if it sets a low today. But it's starting to paint like it wants to head up, regardless of where it closes on the Bollinger Bands in this case. We'll give it till tomorrow, see if it can set that low. $2,040 is the momentum pivot. There is a hidden bull div populating as well here. Looks pretty good. Looks pretty good to test the low, 2080, 2100 area. To be quite honest, that's what it looks like it wants to do. Of course, it has to meet the criteria. It's got to set a low on the daily, solidify this hidden bull div as active. We can see that the RSI is over the moving average. And the bullish control zone's coming in at, that is 2073. So again, that is, between the upper first and upper second there, but I would generally be looking for a test to about 2080 to 2100, and then come back to it. So yeah. Hi, Mark. Not sure what you're saying yes to, but how you doing? Let's move on and take a look at traditional markets, see what's going on with Dow. Still consolidating above the prior all-time high here. Nice compression of the band, so we're getting ready for a more volatile move to begin soon. It is trading and closing. Well, we'll see what today's price closes at, but it's currently trading above the basis band of the Bollinger Bands at 37,500. So you see the compression on the bands. You see BBWP is at 0. So we saw the big expansion to compression and mean reversion back to the basis band here. The next move is going to occur on the next big move will occur on any closure that can kick off expansion above the upper second standard deviation, which would take out the current high side structure. And that is coming in at 37,858. This is going to come down a bit. But basically, any breakout of this current structure is going to make new highs, obviously, and start to kick off expansion of volatility. And directional volatility would be to the upside, of course, with aggressive expansion on any closures above the upper second standard deviation. Now, if the lower second standard deviation is lost, and there is a bit of, there's quite a bit of criteria that I'm going to give you on the downside here. So lower second standard deviation would start to closes below specifically, would start to kick off expansion to the downside, but there is supports right below. There is the 37,100 area to the all-time high by the lower third as it currently stands. Things could very easily bounce there and it become a deviation if that were to occur. As it stands right now, this is going into a sideways consolidation, and we will await resolution next week or week after. So we will follow up on Monday as we're going to get some deeper compression on these bands. We can see that the momentum pivot is at 37,560, and it's currently trading about 10 points above there. So keep that in mind. This is a high-level consolidation after breaking an all-time high. If it did start to get expansion of the Bollinger Bands to the downside, I would be looking for a retest of the prior all-time high below there, and I would start to look, at this consolidation if it didn't get front run before then. But the consolidation around 36, 300 to 500 or so, I would give it some whole numbers there, which is actually above this little consolidation. But as long as it's even above this area here at 36,000, it's fine. And the longer term time frames. We'll come back to that on Monday, though, and follow up, as it is gearing up for a more volatile move soon. We're looking at NASDAQ now. NASDAQ, not quite in danger. I did hear a little bit of a whisper today across the industry of some fear around NASDAQ right now. The charts rule. All right, the charts are going to dictate what's going to happen here. They're telling us everything we need to know. We saw a move back down to the lower first. It did not quite, it got front run above this consolidation over here, which was, the high coming in at 16,166 to the low. Remember, no gap fill. It didn't even gap fill to the low at 15,600. Now, bounce right back to the highs here is what is freaking out some people, even in the industry. And that's coming in at 16,866, I believe. That monitor, I have too many monitors going on here. All right, so one of the big things that I would say is observe that the basis is up and to the right. It's basically in the 2 o'clock position. This is what you want to see to be a little bit more bullish. We could see a high level consolidation. We could see this come right back down to the lower first, and it's perfectly fine. Even the lower second, now that we are seeing compression of the bands, the lower second is coming in right back at this low. We could see another low sweep. Still fine as long as it doesn't drop it, and then subsequently come down and drop this other low at around that 6 to 700. This is fine. This would be a much larger consolidation structure. We would start to see some indicators turn bearish. But on the other side of that, where bulls would want to see a bounce if it does head down and lose the basis. Currently, it's trading above the prior all-time high, by the way, at 16,764. So kind of give it a zone here. If it starts to lose that area, keep an eye on the basis band coming in at 16,678. Below there, lower first, because this is a compression. You'd want to see this lower first as the primary zone around 16,500 or so. That is dropped, then we're looking right back to the low, and then we would be looking for possible closures below there that breach that low to get expansion down to this next area of interest, excuse me. Now, above the upper first, however, we're looking right back to this all-time high again at around 16,969. Nice. Above there, we're looking to the upper second and new highs around that 17,000, which is what we're kind of looking for anyway. Would like to see that target hit. To be fair, the upper second is currently at $17,054. But above there, we can see that upper third is currently at the next area of interest around that 17,250. Now, if Bitcoin does head up and break the high at around 16,969, then I would look for it to hit that upper second around 17,000 and then start to get expansion to the next target at around 17,250. So be aware of that. We do see that momentum is turned to the upside here on the daily. Momentum pivot is currently at 16,288, so basically 16,300. We do have a hidden bull div playing out from that low. It is just kind of peeking its head into the bullish control zone of RSI here. I'd give it a chance, see how it opens on Monday and trades early next week. And we will come back to it, of course. And we have new highs on the run for SPY. Now, granted, it was a gap up on open, and then it traded to a high of around 477. Again, the all-time high still has not been breached here, but this is still bullish. As it stands when looking at the bands on the daily here, we can see that it came down in and around that lower first deviation of the range lows over here, bounced right back to the top, opened right at, in yesterday's candle, opened right at the wick high of the current move at that 477.55, opened a little bit higher today, and then wicked up, very close to its all-time high, a few points off the all-time high. If it can remain above the upper first, that would preserve its chance to go test the upper second and the all-time high at 480. Then we're looking to around 482 to 85 above there, 490, and then of course 495 to 500 points. If it does lose the basis and yesterday's wick low, coming into Monday, of course we're going to talk about it again on Monday, but that's at 472.26. I would be targeting a few points down to around 470.89 to the lower first. Yes, I am getting specific with this. Yeah, I don't usually, but yeah, I am in the market right now in SPY. So 469.94. So basically 470. If that area is dropped, then I'd be looking for the lows to get swept around the lower second. And only if the lower second is dropped, and the wick low here at 466.43, would I be looking for expansion down to the next big zone of interest at 460 to 453 again. It's playing around the highs now. If it does breach 480, I'm eventually looking for 490 and 500 points overall. Yeah. Perfect. Yeah, so did that answer a few questions for those of you who have been waiting for my traditional market analysis? I'm glad yes, you're very happy now. Awesome. Good. I'm glad to hear. All right, so excuse me. Let me take a drink of my coffee here. We're going to turn on the tunes, and I'm going to peruse the chats, public chats, see what everybody's talking about, see if there are any questions regarding some of what we just talked about. And what were we on here? Let's turn the music back on here. I'm going to keep it a little bit lower. It was kind of interfering with my voice or competing with my voice. Let me know if you guys can hear that okay. And if it's an appropriate volume, just kind of sitting in the background there. Am I still bullish on Bitcoin? Am I bullish on Bitcoin? Of course I'm bullish on Bitcoin. It depends on what time frame you're talking about. I mean, it's bearish on some of these lower term time frames, that's for sure. In general, I'm bullish on Bitcoin, yes. I am what you might call a Bitcoin bull long term. Did I talk about the lows, the cycle lows and stuff? Yes, so you must be new. Yeah, no, we actually, here in this group, we had very long conversations throughout the bear market lows, and far beyond the lows. There was a fib poll that we were referencing for the between $15 and $16,000, and you know, on spot it hit around 15.5. But yeah, we've been talking about this stuff for a while, yeah. And then the move into 2023, just, you know, kind of calling out that was likely it. That was the low. There was still targets that could have been hit to the downside, but the primary targets were between $15,000 and $16,000. Talked all about that cycle low, and we've talked about, you know, I still reference, you know, the higher low on the monthly. So if you're fairly new here, I think what you might be asking is, let me know if I'm understanding this correctly. Are you asking, do I believe the macro low is it? Yes. The macro low, in fact, has been confirmed. Now, the macro low was confirmed on this up candle in October of 2023 that set this consolidation as a major low, thus solidifying the previous major low as a macro low. And that was the low here on spot that came in at around $15,500. But yeah, we had talked about this particular group, my channel here. We talked about this coming in at $15,500 back then. Well, it was a range, to be fair. I was saying between $15,000 and $16,000 was the primary zone of interest. There was a possibility of lower targets, of course, but that was going to be the first primary zone of interest to the downside. And I forget which fibs we were pulling because they were across all different time frames, but I believe something like trend fib. Would have been linear. I don't remember which one it was, guys. But it lined up, basically gave us our zone at and it was not that one. I don't remember which fib it was. It was a log, or it had to have been a log. It was this one here. It was the that's right. It was the higher low to lower high continuation. So the first low that was broken. And if you look here, the 2-spot extension was the primary target to the downside. I could have swore that there's also a trend fib that we were pulling that was giving us confluence right there as well, if I'm not mistaken, like right at because I believe it was like a 1888 fib don't know, maybe it was linear. I don't remember. But no, I mean, everything was kind of pointing to that area. There's a potential for more, but you know, that was the primary zone of interest. Cheryl says, when Lambo? You know, depends on if you have a Lambo or not. Depends on what you're trading. Depends on your account size. But, you know, this is, don't mistake this, you know, we've talked about this a lot. What have we talked about consistently here? Well, if we go to, I think this is the index here. Yes, it is. You know, if we go to every prior cycle in Bitcoin, the bear market lower high gets run, and usually you see a rejection around there. It's 2016, runs that bear market lower high from 2014. Here in 2019, we get the bear market lower high. We get our macro higher lows over here. This gets ran and deviated on a closing basis. Didn't quite hit the wicks there. Gets tested up into directly closes like right on the close open of the all-time high. That's what a beautiful thing with that spike of the actual close open on the monthly. It still boggles my mind to this day how perfect that was on the 2019 rally that put in a bear market lower high. Yes, there was, you know, lower high swings, but we're talking closes here. And to be fair, there was a slight higher low that was confirmed back here, but it did not pass the wicks at all. So, you know, until you pass the wicks, you know, you can only target up to them. Once this area was confirmed back here on the monthly, this wick high was the next one on deck to the close open, and then the wick highs above it. But what ended up happening was this February candle spiked this wick high and rejected, and then we had a lower high, so we had a consolidation structure, and then you could see how that consolidation structure regained you know, the basis, you know, basically right after March into April, regained the basis and tagged the upper first, kind of hung around that upper first, and then regained it, and then 3 candle swing to then take the upper second, close, kickoff, expansion. That was also a close open right on the all-time high close open and the 2019 bear market close open, which was already swung on a close open basis over here, and then off to new highs. What do we see here? Well, pretty easy. Got the bear market lower high. We just swung it. Could we see an upper first tap on the monthly coming in at, you know, $34,500 to $35,000? Absolutely, not out of the question. Is the areas of interest down here at 31.8 still on the board? Absolutely. Is this wick low area still on the board? Absolutely, still bullish. That's all the way at 28,750. These are big moves, but it's still bullish AF, as they say. As long as it's above the basis, I wouldn't even be in the slightest bit concerned about anything heading back. I think that would actually be a very good thing, especially in the ETF space. Get a lot more participants with a vested interest in it. Get Bitcoin in a lot more portfolios, even if it is in an ETF wrapper. I think that would be a good thing. Yeah, I hope that answers your question on my thoughts on that. Yeah, we review it quite often here anyway. Let me go ahead and read the rest of this YouTube chat here. So, Cheryl, I'm not really sure if you like everything, what you're asking, everything is tied together in the way that it interplays. I mean, like when you see oil is coming off of lows, trying to regain that $75 region. It's in a consolidation. It's been in a downtrend for quite some time, but it is starting to try for that trend reversal. It's got to break this high, and what does that mean? That means that it's getting more expensive, which means inflation's going to soar, right? I mean, oil is the basic driver of energy prices. And energy prices go up, or when energy prices go up, everything gets more expensive. All right. When you start to see everything get more expensive or inflate, you might see the dollar pop around and pop back up, but in general, the dollar is getting weaker. Now, because, you know, the US dollar is somewhat of a petrodollar, even that's been kind of disconnected, especially with the draining of the SPR and like all this other crap that's been going on. But primarily, this is going to be a situation where if everything's getting more expensive, you know, what is happening? You know, is the dollar also, that's where you have to look for strength in the dollar. Is the dollar strengthening while everything's getting more expensive, or is it getting weaker? And typically, if things are getting more expensive on the energy side of things, then, you know, it costs more to ship things, you know, whether it's via freight overseas, whether it's by airplane, you know, so you got your cargo ships, you got your flights, domestic in the United States in this case, you know, trucking, right? That's at the core of everything. You know, that's how goods are make it to the shelves and are delivered to our homes via the delivery services. So when energy gets more expensive, all that stuff gets more expensive, and that drives what? Inflation. We're already seeing inflation come up a little bit, right? So part of the reason why you're seeing some skittishness in the markets right now is that inflation came in a little bit hotter than the market was expecting. Okay, so because inflation came in a little bit hotter than expected, they're pushing back their projections for possible rate cuts. And I would argue that we probably don't want to see rate cuts right now. When they start cutting rates and slashing rates, it becomes a slash and burn fest, and typically the markets follow with it because liquidity has to readjust. Because now you've got a whole new, you know, you've got, when rates are getting cut, you have a rotation out of the bond market into the banking system, into the loan market. So it's risk on, and then you have this need or mandate to cover those risks, which we're seeing in China is going to be going away. So I mean, in terms of reserves and risk management over there. So who knows? We could be entering like an inflationary period again, and then they turn around and change their stance on rates again. So the market's just a little like thrown by that. I still don't understand how they're thrown by that, because it was pretty well projected. If the dollar's weakening, you're going to see a bit of inflation. You know, and in response, we are seeing short-term yields spike, like on the 1 month. Yield did spike, right? And this was ahead of that, by the way, that news. It's the 3 month. Yeah, this is still in a bit of a, this does not look healthy. This looks like a top being formed on the 3 month. Oh yeah. Well, I mean, it could still keep spiking. They get a nice momentum reset, and this is more of a consolidation on the weekly, so it could keep spiking the highs. But you look at the 2 year, it could get it's in the bearish control zone. Momentum's almost fully reset. If it sets a low here, we could see yield spike on shorter term bonds. Now, I mean, it is dumping off a cliff here for bonds at negative 2.5% for the week. But for that monthly, yeah, it might be over, man. This might be coming to an end. Just like I talked about, Q1 into Q2, we start seeing it. Yeah, we could be looking at reinflation, and then new infusions of Fed dollars into the banking side of the system at the very minimum. we're headed for trouble is what I'm trying to say. The economy itself is in trouble. You know, markets themselves are going to trade the way they trade, and we will be able to trade along with them, no problem. How this all affects Bitcoin is basically that, you know, if things really start breaking, you will see Bitcoin break down in major ways, but it'll still be the best performing asset out there, and you're going to see a big rotation into it if things really start to fall apart in the economy. All right, so let's see what else is going on here. It's been said, I heard that the spot ETFs that settle up on BTC should be buying Bitcoin during the last hour of close to settle all those up. Is this true? That's generally the way that the creation units are going to work. I mean, they're playing catch up, but yes, in general, yes. You are correct, Spin. In an ideal world, that's how things work. And like I said, the Thursday launch of the ETFs was freaking smooth as fuck, man. It was impressive. And it's rare that I'm impressed by anyone in traditional markets anymore. Of course, you've got Crypto X and Twitter and your Rands of the world and all of those guys that have literally some of the most clueless morons that I've ever seen in video form or in text form, you know, spouting off what they think they know when they know nothing. And in most cases, they're scammers. Looking at Ryan over there. Let's see. Oh, no, I don't care who I talk shit about, bro. What do I care? One, I don't have a following to lose, so people who are here because they recognize that this is good information and they stick around for it. Yeah, I'm not concerned. I'm not here to make friends in the space. I'm a trader. Here to make money. I don't offer paid products. I don't shill shit. I have a super small following, mostly friends. And then those who have now become new friends who have joined, yeah. So I'm not worried about it. I don't plan on going and hanging out on their podcasts or any of that stuff, even if I did grow, you know, the YouTube channel or the X account. That's not my goal. Yeah, no, I don't care. It's the MDX approach. Burn them all so that people understand that 99.9% of the influencers in the space are scammers and or just do not know what the hell they're talking about. Yeah, I love that MDX calls them out. You know, Crown also called them out for a long time as well, if you're familiar with Crown. Okay, you are. Yeah. It's like, should I be, you know, let's go be friends with BitBoy. Like, no, the guy's been a freaking scammer the entire time, and everyone knew it. Everyone knew that he was being paid to shill the shit that he was shilling. Like, if you didn't know it, it's because you were new. And you just think that this guy knows stuff about the crypto market. He knows what all the hottest stuff is. I'm going to go there to get my news. That's, you know. Bobby says MDX GOAT. Yeah, MDX is great. Dude's a real trader. I mean, like, real traders know what's up. MDX, Crown. You know, these are guys from, you know, I don't know if MDX was ever like a licensed guy. Seems like he was, but I don't remember. Maybe he wasn't. Yeah, Crown. He was an industry guy. Yeah. Well, Spin, the reason why is because I got asked in one of these other chats, like, oh, you're going to burn bridges if you want to grow your account. I don't care. I'm not here to grow my account. Hey, if you like my analysis, the technical analysis, and you find it useful, that's why you sub. That's why you follow. I'm not here to make friends with these massive influencers, like in case, you know, I don't want to ruffle feathers, in case someday they can help me out. Like, I don't care. There's a lot of people that I respect in this space. Yeah. MDX, super stand-up guy. You know, and you got to remember, not everybody's going to be right about everything, including me. We've been nailing these calls, but it's because we have a good system. But even then, you can get caught by surprise. You know, Crown's a great one. The Pizzino brothers are great. You know, I leaned a little bit more towards Michael Pizzino. Jason's great, but just because he's more, you know, he's a chart guy. Yes, Jason looks at the charts and does that stuff, but he's a narrative guy and he, you know, bigger picture guy, whereas Michael hones in on the charts. He was an industry guy as well. I think he's fantastic, does a great job. And then there's guys who don't, you know, they're not YouTubers, but they're on X. You know, a guy who takes a lot of shit from a lot of people. Credible Crypto is great. Rickus is great. Off the top of my head, I can't think of. There's many others, but you know, those are two really good ones. Oh, Roman. Oh God, Bobby, thank you. Well, Roman, you know, he's basically retired. He still streams every once in a while, but it's just, you know, he does what I do. I put work in because I have friends in the industry and friends personally that want to hear my opinion on what's going on with price. So yeah. But yeah, it's kind of a Roman situation as well over here. You know, Roman's absolutely one of the best out there. And the funny part is I don't think he's an industry guy. He's just a freaking genius, if I'm not mistaken. Matthew Cratter from Bitcoin University. He's a narrative guy. But yeah, he does understand trading. He's an industry guy as well. He's a really good guy to go and look at, you know, on a daily basis. That just kind of, you know, rights the ship when it comes to narratives. So, hello, this is Matthew Cratter from Bitcoin University. Roman is a god when it comes to charting. He will show you every manner. I don't do that anymore. I could show you every manner of charting. I could, you know, cop Roman style as well and do the same kind of stuff, which is interesting that he can do that stuff, that he knows all that he does, and he's very, very practiced and studied. And, you know, has created indicators and indicator suite that is really probably one of the best on the market in terms of indicator suites. But, you know, he's also a guy that understands that you don't even need the indicators. They're just there for influence, right? What did I teach all you guys that have been around for the past year with me, or the past 2 years with me? Some of you even before I started streaming publicly. I mean, this channel, by the way, for those that are new here, I used to stream on YouTube, but only privately to my group of friends, and that was it. And then they urged me to bring it public because there were so many people doing TA that were just terrible. You know, Roman had basically already retired. And you got Crown, and Crown's great, but there's, you know, a lot of what Crown it does, and a lot of what I do, to be fair now, it relies on you having a basic understanding of what's going on. So, naked charts. What did I start out with? Naked charts, no indicators. Just a butt naked chart. Why? Because then you got to go and you got to find trend. You got to understand what trend is, and you got to understand support and resistance. Once you understand those two, you're golden, man. Throw on the next piece, and that's volatility and understanding volatility, and then you can understand momentum. And everybody in this space that's new, what do they start out with? Momentum. They always start out with momentum indicators. Oh, I got a RSI, and I've got a Stoke RSI, and I've got a Cypher B, and I've got a this, and I've got a that, and it's all momentum based. And if you don't understand shit about trend or support and resistance or volatility, that momentum indicator does you no good. You're just gambling. You're just gambling. Gambling. Did I say that wrong? I mean, I know I'm repeating it. Did I really say that wrong? Gambling. No, I put a nicotine pouch in my mouth. That might be why. And the caffeine is really kicking my ass right now. No, it's been a fun couple of days. Yeah. It's been a fun couple of days. Look, guys and gals, I'm excited. And I know that there are some that are not excited. You know, he's not watching this, but, you know, Mr. Fippaswani is not excited. Oh, God. Please rant about your thoughts on what's going on. Look, I don't want to deter new people from hanging out with us on stream. All right, so the request is my thoughts on why ETFs are good for Bitcoin. Well, because there is a large demand for Bitcoin from people that don't understand and don't want to be bothered, at least right now, with signing up for an exchange, understanding how to transfer money in and how much does it cost. I got to buy my credit card, and then there's a $20 fee to get my money on this exchange, and then I got to go buy Bitcoin, and I don't really understand the interface, and how do I bid? Do I just hit market buy? And like there's a whole ton of people. There's a whole ton of people who are out there that want to get involved, and they want to get involved in a way that they feel is safe, right? They want to try this Bitcoin thing out. They've been hearing about it for so long. They saw it run up. They saw it crash. They saw it come back up now. And they're like, I want a piece of that. I want to be involved. I don't understand it yet, but I want to be involved. The easiest and safest way for them to do that and at least participate in the market while they learn about it is an ETF wrapper. A spot ETF wrapper is the absolute best way to do it. Also, it allows them to leverage against their portfolio if they ever want to. They got hard spot assets in there now. I don't know if you know this, but you can loan against your portfolio. So there's people that do that kind of stuff too. It's not easy to do that, you know, and it's a good way to do those things. Now, it's not what I would advise anybody do, but you know how people would deposit Bitcoin into all those places that locked their Bitcoin up and then went out of business with their Bitcoin and then had it liquidated to creditors? Looking at Celsius and BlockFi. People were depositing Bitcoin to then take loans against it and, of course, go and gamble on the altcoin market in many cases. But what ends up happening is, you have that same appetite, but in the traditional markets, you have a bit of a safety net. The other thing that is available to people with a spot ETF, it's easier for municipalities to put it on the books. Okay, it's a convoluted process, at least as it stands right now. There hasn't been there are companies that service this kind of stuff. You know, like Miami has Bitcoin on the books and cold storage. They're in cold storage with a custodian, but you know, there's a lot of cities, there's a lot of state, county, and local municipalities that want to participate in these markets because they're starting to look into obtaining funds to set up miners at local power companies, and a lot of those local power companies get subsidies from the counties and cities that they are located around. And if they can get proof of work Bitcoin miners in there during the off times, they can offset costs and lower energy prices and all kinds of stuff. So you have this easy way to get in. And you have, you know, they're not going to be, if they cash out or redeem, they're going to redeem cash. But almost all of the broker dealers are working on solutions for those that want to cash out or redeem the ETF, and get custodied Bitcoin, you know, and either take custody and or have custodied Bitcoin that they hold, right? And obviously you should hold your own Bitcoin and you should take self-custody, but they're working on solutions where, you know, you redeem into that at a broker level instead of the ETF level. And that's actually a good thing for tax expediency. It's done at the broker level. It can be taken care of right there. It doesn't need to be loaded all into the ETF side of things, which is what an in-kind redemption would be. Which at the end of the day, you know, you're redeeming, and there will be in-kind spot ETFs as well, but at the end of the day, it becomes a goofy, messy tax situation with the way that current tax laws are written. So just understand that these are all exciting things for the adoption of Bitcoin. And once people get a taste, then they're going to want to learn more. And there's going to be more development around things like how do broker dealers service those customers that do want to hold Bitcoin directly. You know, either take it self-custody. They can start with this with a cash create redeem ETF, and then they can sell out into self-custody, or they can be, you know, many of these broker dealers are going to be doing custody with certain companies, so they can offer that as well. And they can make that, you know, they're going to be making that transition smooth. Like, let's say I do want to, you know, lean against that particular asset. It can be done in two ways then. And there might be advantages to doing it one way versus the other. You know, taking a loan against the portfolio with the holdings in it, or taking and redeeming that out into a custodian through your brokerage, and then taking a loan against that while they're holding that particular Bitcoin against your loan in custody. That's another way that you're probably going to see things go as well. So this is all the way my true belief is that Bitcoin will become the base layer of energy output of society. And when I say energy output, I don't just mean the grid. All of our money is based on our collective energy output, right? And then, of course, our governments leverage that energy output and our currency through taxes. And then they ramp it up to 125 to 300x and run our deficits up and run our dollar or our currency into the ground. And if we can shift that energy output to Bitcoin being the energy output of society, and it's going to start with something like the electrical grid, you're going to see a lot of innovations in that area when it comes to companies focusing on energy providers in the United States with mining rigs and mining setups. There's companies already out there doing this stuff, right? There's all kinds of different ways to harness the downtime on the grids to then, you know, subsidize that with Bitcoin mining. There's also plans like here in California. There's a really cool plan. I'll tell you guys about this. This is something I know about. I may or may not be invested in this company. We'll see what happens going forward. But there's a company here in California that is working with solar providers, and in the excess energy that can be stored in the battery banks that many of the homes here in California have. There's a lot of homes here in California that have solar, and what they do is they sell the energy, that excess energy, back to the grid, and that either gives them credits, they get paid money back, and or it offsets anything that they pull from the grid, so they don't pay anything. Well, in this case, there's a company, there's a few companies to be fair, but there's a company that's offering to set up Bitcoin miners so that extra energy can be used to subsidize the cost of running those Bitcoin miners for customers here. And this is just, you know, residential and commercial. So it's more focused on commercial right now, and then they're looking to roll out to residential as well. They also have a partnership with a company called Sunrun that's owned by a parent corporation I forget the name of, but they're going to be doing this as well soon. I wouldn't be surprised if you see something like Tesla getting into that as well with their power walls and stuff like that eventually. Although, knowing Elon, he'd probably have it mining Doge or something. So let's look here. Bobby's being a degen, I see. What else do we got going on? So in summary, yeah, I think it's great for Bitcoin. I think it's the perfect way for Bitcoin to infiltrate the financial system and eventually become the base layer of energy output of our societies, or of society in general. That's the ultimate goal. Pitbull, MDX Goat. Let's see where else I got lost. Spin says I'm a Landy fanboy. Thanks, bud. He enjoys the Landy rants. I use RS. Oh, Cheryl says she uses no indicators. RSI, that's it. Damn. Oh, Landy bands, of course, she says. Well, that is an indicator. It's a suite of indicators. If you do have the Landy bands, you know, there are moving averages. You can customize them. You can select SMA, EMA, type the number you want. You can turn them on and off individually or as a whole here. It might be actually worth going really quick here and looking at the daily. All right, so Bitcoin's threatening to lose the 21 EMA on the daily, but the 50 is right there at around 42,500. That's what it's probably going to update to later today. So that is, let's go ahead and turn on the medium, the multi-time frame levels. That's right at the lower first is lining up with the 50 SMA. So the 50 to the 55 are the next big areas of interest, to be quite honest. And you know, we're going into kind of a compressive phase. You see that BBWP is below the moving average, so lower second might even compress up into that 55 EMA, which is coming in at around 41,800 to $42,000. So yeah. Cheryl, I actually like the nice miners. Why can't I think of the BitAxe miners are really cool, and there's a lot of really cool development around those BitAxe miners. If you want to get into understanding how to mine, look, you're not going to make money. You might get in on a few sats here and there, but it's mainly for funsies and learning. Although there are guys pushing those things and actually mining, like they're pushing the hash rate on those things pretty far. for low wattage miners. I'm a big fan of the BitAxe mining initiative and those boards. Bobby says you can have one-to-one mentoring for a few $100 per hour. Where? Here with me? I don't offer anything like that unless you're talking about somebody else. Roca clarifies Roman's from from the real estate side of things and got involved in Bitcoin pretty early, and is just a freaking genius. And he's got a crew of geniuses around him. Fibaswani called for 48K to 50K, I believe. Yes, you're correct. When it was around the lows, when it came off the lows, when it regained 20K. Yep. Lindy, the latest fad is the spring equinox. What's your thoughts? I don't care. I don't care about any of that. Chart's gonna tell you everything you need to know. I don't keep track of any of it, because if I did, it would set my bias longer term. And I trade daily. I'm a day trader. Yeah, you can look to Roca for some of the more esoteric stuff, whether it's candle counting. Roca's got freaking crazy genius stuff that he does. Brought the 888 to my attention on the fib levels, and he had it fully back tested. Of course, I went and back tested it myself because I have to, and found it to be absolutely OP. He's also into the candle counting, your TD9, TD13s, time fibs, moon phase stuff. He's all about it. Dude's a pro. Bob, don't let Bobby. Bobby's a degen, but he also knows what the hell he's doing. Don't let him fake you out. Like, oh no, I don't know what I'm doing. He's fairly new to the markets, but he's also killing it because he's got a good eye for levels and areas of interest. JR, who might be here, might not be here. He's also a POC nerd, and really good at identifying areas of interest. He's still getting used to the volatility side of things, I believe, but he's also like another one that's got a wealth of knowledge in that area. Oh, okay. Bobby clarifies from Roman he can tutor. Oh, yeah, it makes sense. He's got so much knowledge that if he's going to start having any one-on-one sessions, you got to pay that dude for his time, and it's not going to be cheap. Bye, Cheryl. Take care of yourselves. Self. I said selves as if you're more than one person. Take care of yourself. Glad you were able to hang out today. Roman is the kind of guy that could turn people into really good traders, and he has many. I believe Trader Main was hooked in with Roman for a while. Take care, Roca. Unless you're telling Cheryl to take care. Yeah. No, there's a lot of really experienced people that are not industry people that are in this chat right now. Some that I know are just hanging out and not actually chatting, but and then there is a few industry people as well. They're probably not going to give you advice because they can't, unless you pay them. Because it would be financial advice, yeah. I agree. Cool. I think that's gonna wrap it for today. We covered the big stuff. that I wanted to cover regarding this move down. I mean, look, when looking at EMAs, they line up with the lower standard deviations of the Bollinger Band, so I would not be shocked to see Bitcoin dip into the 42.5 to, you know, maybe even as low as the lower second on the daily at 41. If it starts to drop that area, just watch 40K. Other than that, looks fine. Much needed pullback, nice spike up to run the bear market highs, and you know, take the trades that are available. Bitcoin will make a new all-time high eventually. You don't have to put it on the clock. Let it tell you when it's going to do it. All right. Awesome. Well, thank you everyone for hanging out with me today. I'm going to leave the tunes on for you. Oh, one last thing. If you sign up for a free crypto quant account, this is the free version here. I want you to go to the Bitcoin market cycle. There is the crypto quant Bitcoin bull bear market cycle indicator. It tells you when things are extremely bearish and extremely bullish, and kind of the shifts in the market on the top here. And then it has the inter-exchange flow. And this has been a good indicator, picking out significant pullbacks, such as this pullback here from, guess when, 2016 to mid 2016 to, yeah, it was just about mid 2016. So it was the spring into the summer pullback before the big run up into the 2017 high. Got the drawdown from 2017 to the bear market bottom, and then the bull run all the way up to the $65,000 level. Picked out the highs there into the accumulation, and then the spring, and then told you that things were probably done after that until now, and it just ticked over red here. So we're probably looking at that monthly pullback to occur and go a bit deeper. It's only one tick. This is a the IFP, or the inter-exchange flow pulse. Crosses above the 90-day moving average, it's bullish. Crosses below, it's bearish. It's just touching off it now. It doesn't need, you know, it can bounce off that area and bounce around and head back up. Remember, we are looking at the halving coming in probably second quarter of 2024 here. So understand that we are in a we might be looking at our pre-halving pullback beginning to occur right about now, which I think is perfect timing for those of you who are watching spot Bitcoin and want to collect more. And it's perfect timing for the spot ETFs to get in before the halving. So it's a good thing that they did this when they did, to be quite honest. I will, I believe I retweeted his tweet here that has the link here, but we'll revisit this as well. Roka says the halving is predicted to be on 420. Yeah, isn't that funny? It's always a meme number. Hit 69K on spot, and then the halving comes at 420. Like high at 69K, halving at 420. Just every meme number you could possibly get in there, right? All right. Well, I appreciate everybody hanging out with me today. I will have another. Here's our bounce. We ended up not getting that rundown to the lower second on the 15-minute here. That's okay. It did bounce off of one of the major supports that we were looking for, though, at 43,200 or so. And it's going into a compression phase here. One of the last things I did want to check on here is the hourly. We are getting BBWP very close. The moving average is catching up, so we are likely to see price mean revert. We're starting to see the etchings of that now. If this hourly candle closes above 43,835, we will have a low set, and probably looking somewhere around 44,000 to 44,250. Above there, we're looking at this low over here at 44,700, and then back to 45 and possibly 45.5. We got the basis on the hourly there to the monthly. When looking at the 4 hour, let's look at the hourly on momentum as well. So momentum will turn up on any close above 43,520 right now. I would probably give it another close after that. Get the BBWP under the moving average, get the moving average a negative slope. That still means that the lower second is in play though, as long as it is trading and closing below the lower first. So if you do see the hourly still continuing to close below the lower first at around 44,250, then the lower second, wherever it is, around the lows or lower, is in play until you see that lower first closed above. Needs to maintain closures above there, push up to the 44.7 to 8 area, and then subsequently test 45 to 45.5 at the monthly. That's what I would look for in the immediate short term. And then it's more about the 4 hour after that. If the 4 hour can, regain, if the hourly regains the lower first, we'll have regained the lower second on the 4 hour. Then your bias is looking to that 44.8 to the lower first there, coming in at 45K. So we have confluence there. Above there, you're looking to 45.5, where the prior 4 hour low is, for a retest, and then come back to it later. Stoke would turn up on any close above 45,375. It's probably going to be around 45,000. Keep in mind that volatility remains high. So expansion to the downside is going to push this lower second right into this weekly and possibly even under it at 43.2. All right. Have a great weekend, everybody. Again, I appreciate you hanging out with me, and I'm going to leave the tunes on for you. Let's set the timer here. We'll give it like 10 minutes. Oh dear, I lost my timer program. It's SNAS is the timer program. Let me get that back up and running. We'll set the timer here. Today is the 12th. We'll go for 12:45. So if you want to hang out, listen to some beats till around 12:45, you're more than welcome to. And yeah, I think with that, it's going to be Landy out. Take care of yourselves. Have a great weekend.